Hey guys, Jared Wesleyan back for another important video lesson on how to make you a better trader. This is an interesting one because this actually just happened to be today, and it harkens back to a lecture I did for you guys, maybe 2 years ago now, maybe more, somewhere around that. And it was called How Things Happen Matters, but It Shouldn't. How Things Happen Matters, but It Shouldn't. Okay, and you think about that title and you go, what does that really mean? Well, how things happen in the trading day really shouldn't matter. What happens, happens. You follow your plan, and that's it, right? For the professional trader out there, that's the only thing you can do is follow your plan and then go home, okay? But it's not always that simple, right? And you sit there and you think to yourself, have you guys ever had those days where you started the day loser, loser, or maybe loser, 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 and what happened? You were a little bit mentally distorted, perhaps. Maybe you went on tilt that day because you started the day down. And possibly, what if you started the day down, loser, loser, and that was piggybacking on a bad week or a previous bad day? So maybe it's Wednesday and Tuesday was bad, and now you're starting Wednesday off terribly as well. And you're sitting there going, oh my goodness gracious, this is crappy, right? So when you think about it, though, the odds are the odds. That's it. The odds are the odds. They are what they are. You see, let's just say hypothetically you have 10 trades that you took, okay? If you have a 50% batting average, well, of those 10 trades, you're going to lose 5 and you're going to win 5. So does it really matter the order in which they happen? I mean, you could start out with 5 straight winners and then have 5 straight losers. You could start out with 5 straight losers and then have 5 straight winners. It doesn't really matter. Or you can go winner, loser, winner, loser, winner. It doesn't matter. But it does matter mentally. Statistically, it doesn't matter. So what I want to talk to you guys today about is something that I did today, and it's bugging me. And I'm doing a video just to kind of release it, like basically to help keep me accountable. All right, and I'm sure it's something you guys have done before too. So we have Roku right here on the screen on a 3-minute chart, okay? And Roku gapped down and immediately went lower, okay? And Roku had room to drop. It was showing relative weakness to the market, but more important than just relative weakness, take a look at the market. Look at the market. Here's the cues. The first, I don't know, what are we at? About 30 minutes of the day, the market went straight down, okay? Take a look at the spiders, the S&P 500. What happened? Straight down. So, as we always say, the trend is your friend. You should try to trade with the trend. So I was, as the market was falling and breaking some support areas, I was looking, going, you know what? I think I want to find a short idea, and Roku was one of my top watches. Well, take a look at Roku here. It went lower, gave us a 3-bar play, wide range igniting bar, followed by a narrow range resting bar. And I got in right there at $47. Basically, you can see the line that I'm drawing right there at 47 bucks, okay? The stop loss, because it was earlier in the day, I gave it a lot of room and I gave it 47.80. So it was an 80-cent stop loss. It was kind of wide, but the stock had plenty of room. But how things happen matters, but they shouldn't. Okay, so this immediately triggered, and for those of you that are 3-bar play traders, the 3-bar play is a momentum play. This is not the type of pattern that chops around and then ultimately works. It's either goes or they usually don't work. Okay, and I've also done another video on why I quote fork trades. When I say fork a trade, it means I get out of a trade. Okay, why do I get out of the trade? Well, it's not doing what I want it to do, what it's supposed to do. So the point I'm simply making is a 3-bar play is a type of pattern that just hits and runs. Well, the initial drop here was okay. It went down 18 cents. Not great, but okay. And then what happened? Came all the way back up right here. Right there. It went back to like 47.64. So I'll go down to the 1-minute chart. Let's pull this over real quick. Okay, right there. So it triggered. And you see this pivot right there? It went all the way back up. Now, normally I would want the stock to pivot around 47.20. But it went to 47.64, and it came, I don't know, back against me about 80%. It came within 10 or 15 cents of my stop loss. I got really nervous. I'm like, oh man, this thing's not going to work. It's a momentum trade. You know what I mean? It's coming back against me. So what do you think happened? Well, the stock went back down below break even, okay, and I took half my shares off the table. So I literally rode the rest down for a half of a lot, and then when it got down to 46.50, I wasn't feeling as good about it, so I took some more off, and I ended up making $643 on this trade. But the point simply was This stock is one I probably should have held all of it. This topping tail should have ultimately given me a little extra confidence, but because it almost stopped me out, I got a little bit nervous. In this case, I made the right decision, but I didn't. You're like, what do you mean, Jared? What I mean by that is, yes, this thing ultimately would have stopped out because the market pivoted and went higher. So this is where confirming bad habits can be tough for your trading future. Think about it like this, okay? If you're rewarded for bad behavior, you're probably going to do it again. I was rewarded for bad behavior today. I took half of my shares off this at 47, and I covered a few more down here, and I made $600 on a stock I probably should have lost $1,000 on, okay? So I was rewarded for my poor behavior. This is never a good thing. This is why I'm doing the video, to put it out there so you guys can see. I make mistakes, you make mistakes, but we have to correct the mistakes. And it wasn't just on Roku today. And this is why I'm doing the video. You ready? Let's move to Microsoft, okay? Well, Microsoft was a pullback retest of support, and it ended up being a pretty good entry, okay? But again, you'll note I only made $500 on this, and I'll show you why, okay? So again, how things happen matters, but it shouldn't. So we got in Microsoft right here. See this bottoming tail right there on the 1 minute? It was actually a pretty good entry, 234.70, 234.75, but I gave it a lot of room. I gave Microsoft 233.30. All right, I'm like, this is a support play, okay? Now let me blow this up a little bit bigger, right? This is a support play. So basically, we're expecting Microsoft to bounce off of this area, 234, maybe 234.70. That's the bottom of the support area. So you see it. I'm buying a support bottoming tail timed with the market bounce. Well, guess what happened? This thing popped up and then completely pulled back. Well, it came within 20 cents of stopping me out. Again, an 80% pullback from my entry. And I was sitting there going, oh, you've got to be kidding me. So what did I do again? When Microsoft started bouncing back up to break even, I got out of some of my shares. And then what did the stock do? It ripped higher. I mean, it ripped. It went about $4 or $5 higher. I could have probably made 3 to 1 of my money, which would have been a $3,000 or $4,000 trade. I made $500 on this thing because that pullback scared me, right? Because this was the type of pattern that I expected it to wiggle a little, but I did not expect it to need 80 or 90% of my stop loss to work. Okay, so this is an example that brings me back to the straight and narrow. What I mean by that example is this is an example that cost me money. Roku saved me money, right? Doing the wrong thing rewarded me, not good. On Microsoft, doing the wrong thing did not reward me, it cost me money. Long story short, I made $1,100 or $1,200 today, and I should have made about $3,000, $2,000 or $3,000. I should have doubled or tripled my money today. How things happened matters, but it shouldn't, right? So guys, I want you to really give it some thought for a second, all right? I mean, when you are on, for example, a losing streak, are you changing your trading? Are you breaking your plan, okay? Do you become more aggressive on a losing streak, okay? Trying to get your money back, okay? Are you less aggressive to the point where you're gun shy, right? You're really, really gun shy, and you're scared to push the button because you don't want to lose another trade, okay? Are you becoming overly strict, right, where you're almost hand-tied? You're like, well, it's a pretty good pattern. It's a 9 out of 10, but I lost 2 in a row, and okay? Do you become too lenient with your patterns, where you're Elmer Fudd, just shooting at anything that moves? Okay? Ask yourself these questions. Are you raising your risk to compensate for losses on previous trades in hopes to make that money back? Okay? So I want you to just give some thoughts to those questions, all right? Because honestly, the order in which things happen really should have no impact at all on your approach to the market every day. You have to understand there is statistical probabilities here. If you have a 2 to 1 risk to reward or a 4 to 1 risk to reward, guess what? You have to know, understand, and expect the statistics to rear their head sometimes. What that means is reversion to the mean is real. If you typically have a 50% batting average, and let's say this week you have an 85% batting average, Guess what? Reversion to the mean says in the next few weeks, the next 1 or 2 or 3 weeks, you're going to have a week with a 15 or 20% batting average. Why? You got to get that 85% back down to 50. It's the same as a baseball player. When they go on a 20-game hitting streak, you'll notice after the hitting streak, they typically flounder around a little bit. If you go 4 for 4 one game, you might only go 0 for 4, 1 for 4 in the next game. Reversion to the mean's a real thing, but here's the problem. Every single day, your approach needs to be exactly the same. Exactly the same. No matter how much money you made or how much money you lost, your approach needs to be robotic. We call it robotic indifference. Every day you do the same thing, and the odds are what they are. Occasionally you'll be on a crazy good winning streak, and occasionally you'll lose 6 out of 10. And you're like, wait a second. I normally have a 50 or 60% batting average. Why did I lose 60%? That's reversion to the mean. Okay? So I want you to keep thinking about that, though. When you track your trades in your spreadsheet, I want you to have notations in there, commentary in there saying, hey, what was my mindset during this trade? Was I overly aggressive because I lost 2 in a row? Was I too strict with this pattern or not strict enough with this pattern? Did you skip 2 or 3 trades or miss 2 or 3 trades because you were scared to push the button? These are the things that I want you guys to think about. So again, it's a kind of a quick, short video today, but I really want you guys to think about what's costing you money. What is costing you money? All right. Again, some people, like, in basketball, you have people like Kobe Bryant. He could be 0 for 15. He's taking the 16th shot. He doesn't care. Why? Absolute confidence in himself. Other players, they might be 0 for 7, 0 for 8. They have a wide open shot. They pass the ball to somebody who's double teamed. Well, that's the wrong play. You might be 0 for 7, but you're wide open. You take that shot. It's the same in trading. You might be 0 for 5, but if you see a perfect pattern, and it is truly good, you take the shot. You take the trade. Of course, unless you've hit your maximum money management for the day. Money management supersedes everything. That's a whole nother conversation. But I hope you guys are understanding where I'm going with this. Trading is a business, and it's a very challenging business. It's a game of odds. It's a game of statistical probability. You're going to lose certain trades, even if they're great ideas. That's why we have stop losses. But that's okay. Because when you win, you're going to win 2 to 1, 3 to 1, 4 to 1. So you can make do with having a 40%, 50% batting average. You don't need to win all the time. You're basically like a baseball player. You hit 300, 400, 500 in trading terms, you're a rock star. You're a rock star. You don't need to have an 80% batting average. Okay, so I really hope you guys take this short lecture to heart, because how things happen matters, but it really shouldn't. Your goal is to not care. Robotic indifference. You come in every day, you scan for your gap list, you build your watch list, you have a market bias, you focus. You come in, you take your 2 or 3 or your 4 trades, and you let the chips fall as they may. And when you're a good trader, you're not going to take a lot of bad trades. You're going to take mostly good trades, but occasionally some of them will stop. Okay? So I hope this lesson, guys, was helpful for you guys. I hope you learned a little bit about the fact that you need to be a professional, the fact that you need to come in every day and be consistent, and also the fact that even when you are a professional, sometimes you will make some mistakes, all right? And that's a good time to talk to your accountability partner, okay, or your trading buddy or somebody and say, hey, I need you to review what I did today because I messed up today, and I need to be held accountable for my mistake so that I don't do it again, because you do not want this Roku situation to happen to you. You really don't want to take a trade and get rewarded for bad behavior. Not a good thing, okay? So if you do, have a consequence system for yourself. Say, hey, I messed up today. I didn't follow my plan, so therefore, for example, I can't go golfing today, or whatever it may be, but it's something severe, all right? So hope you guys learned a little bit about that. I'm Jared Wesley of Live Traders. We'll get back at it again next week.